Good afternoon, all. Steve Parisi here with IBC Global. Hope your day is off to a fantastic start as usual. Today, we have a guest and someone that I've become friends with over the past year or so, Justin Duffy. Justin, how are you today?
I'm doing great, Steve. Thank you for having me. How are you?
Oh, fantastic over here. Thank you so much for taking some time. I know you are extremely busy, traveling quite a bit as well. I appreciate you making some time today. I think we'll have some fun, and I think listeners will enjoy it too.
It's an honor, Steve. Thanks for having me, buddy.
Likewise, mutual feeling. So there's a lot I want to cover today, but just to kick things off, so people can know exactly who you are and what your background is. If you'd like to provide a little bit of background on yourself, just with respect to what you do for work, which is a number of things, because you've got to call it a day job, but then also what you do on the side, which you have a lot of fun with. If you want to provide an overview on that, I think that would be a great starting point, and then we'll get into cash value life insurance and how that complements everything.
Sounds good. Sounds good. Yep. So I am a cardiothoracic surgery physician assistant, and I've been practicing in cardiac surgery for about 5 years. I'm currently located in Herndon, Virginia, which is about 45 minutes outside of DC. Originally from Orlando, Florida, is my hometown.
Nice. And Orlando, Florida, that's actually where you met someone who's a mentor of mine. His name is Darren. So you know who I'm talking about.
Oh, yes.
I'm up in Pennsylvania. Just when he visited here, I like him a lot just for a number of reasons. But I mentioned him to you one day during a conversation, like, I know him too, because he's from Orlando, Florida. I'm like, what are the chances of this?
I know. And then the crazy thing too is that I do travel for work in Pennsylvania as well. So
Yeah.
even though in Orlando, travel up, to Pennsylvania area, I'm like covering the whole DMV and Pennsylvania area, and then you're there, Darren is there,
Yeah.
so it's kind of a small world.
Yeah, I know. It really is when you think about it. So you're in the medical field, physician's assistant in the cardiac field, because I'm going to have a hard time pronouncing your actual job. But
Cardiac is
aside,
fine.
thank you. I appreciate that. So aside from that, you're also into real estate, correct?
That is correct. Yep. I've started doing real estate investing in 2020.
Gotcha. So real estate investing, I know you and I have spoken about just deals and such, or not so much the specifics of your deals, but that's something you're actively involved in. And that's how you got, correct me if I'm wrong, how you were introduced to cash value life insurance through real estate education, correct?
So actually preceding that,
Okay.
I was introduced to whole life insurance in general from a financial advisor that was like a fiduciary through Mass Mutual. And he introduced me to the concept of whole life insurance. Prior to that, I didn't have any knowledge of it. So I would say that that was probably like late 2019 that I got introduced to whole life insurance as a retirement tool.
Got it.
So the way that it was introduced to me was, you know, to be more specific about what I do, um, I travel for work. So I'm an independent contractor as a physician assistant. And so I travel to different hospitals and I cover where they're short staffed. You make significant amount of money doing that because they're paying you basically hourly crisis pay because you're covering where they need personnel,
Yeah.
and you're not taxed. You don't have any tax uh, withdrawals coming from your paycheck, so you see the whole thing. So that could be a good thing, it could be a bad thing, depending on how disciplined you are,
Yeah.
and depending on whether or not you have a good accountant, good bookkeeping, and whatnot. So when I was looking for a financial advisor, the financial advisor that was introduced to me was a fiduciary who um, could write policies for different companies. And then in addition to that, he also was, able to set me up with like a brokerage account, a retirement account, and stuff like that. So that was kind of like the pitch was, here's a tool that could help, kind of hedge against inflation and also give you something that's outside of the stock market. as part of your long-term retirement tool.
Got it. Save money over time. And was he
Correct.
specifically referring to the cash value aspect there?
Yes.
Got it. Okay. And let me ask this. So that's when you were first introduced to whole life insurance. A lot of people are introduced to it in the same manner. Was there a lot of conversations around policy design, how to maximize the cash value, or more so, here's how much you want to allocate toward it? And you just pretty much said, okay, that's my premium and I paid it.
That was more so of what it was of the conversation was, because I didn't know at the time that there were different types of
Right.
ways that it could be designed.
Yeah.
So I was just kind of taking his word for it. He showed me a nice illustration, and he's like, here's the money that you would have if you don't touch it, when you're 55, you not like a retirement account where you got to wait till you're 59 and a half.
Yeah.
We could kind of get as much money in there as possible now, and then when you're 55, here's how much you'll have in annual income.
Got it. Just a long-term play. Pay the premium now, and here's what it'll grow to over time.
Exactly.
Which, by the way, for most people, just when you look at the percentage of whole life insurance sales in the industry, it's a little over 90% are in the manner that you just described, where it's a life insurance policy. It's typically premium only. There's no PUA riders, term riders, none of that stuff. Just a premium policy. We pay it, low cash value in the beginning. Over a long period of time, it does eventually build up. And that is traditionally how whole life insurance has always been sold. And the majority of whole life sales are still done in that manner. And then as we transition to the next part, being creative with it and the high cash value product,
Mhm.
it does require more research, at least at this point in this day and age and this point in time, more research really on the policyholder's end, where I've got to have some level of, okay, I want to dig into it and try and understand it because it is a bit different. So that leads to my next question. So you started out with a basic whole life insurance policy, and then you started to discover the high cash value life insurance product. Was that through more research, or was that through real estate investing research?
So that it was kind of both,
Okay.
right? Um, I was a little bit uncomfortable with the discussions that I was having with a financial advisor because I was disappointed because it felt like everything. I'm 32 years old, right? At the time that I met him, I was 30. And, here I am making all this money, and everything was designed for like when I'm 59 and a half, 55, 60. Here's a nice retirement income for you. Your retirement income will be this. And I'm like, yeah, but what am I going to do now? Like, how do I invest now? Right. So that was the missing piece that was really keeping me up at night was I'm making all this money now. How can I make it work for me now while I'm making it, not saving it into something that I'm not going to touch, right?
Yeah.
So I started, kind of digging, and then I was introduced to real estate, or I kind of felt like I was compelled to look into real estate when I had to pay my taxes, and it was kind of that was another shock to me was, I was in a very, very, very high tax bracket, somewhere in the neighborhood of 60%. Because as Robert Kiyosaki says, being self-employed or independent contractor, it's the worst category to be in because you get hit with self-employment tax as well, which is about 15% in most places. So high income, in addition to that self-employment tax, boom, 60%. Literally watched all of my hard income savings go to the IRS. And so the tax preparation person that I was working with at the time, she said, "Well, Justin, you don't have any kids, you're not married, you don't have a house, you don't have any tax shelters." She said, "What you need to do is you need to start looking at different tax shelters, probably real estate. If you're not planning on getting married or not planning on having kids, maybe real estate would be your babies, as it were." you know. So that's when I started, like, trying to connect with local realtors, looking at, what would be a good opportunity to maybe start off with like a single family home or something like that, that I could start, building a real estate portfolio to get some tax deductions.
Gotcha. Check that out. How
Yeah.
so since you started the real estate practice, I'll call it, Zero. What are you at now from a property size standpoint?
24 units now.
Nice work. Yeah, in a
Yeah,
short period of
24 rental
time.
units. Short period of time, but interestingly, like once you get going, you kind of get some momentum, you learn, and you get educated, you connect with the right people, you start building a team, and
Yeah.
things just really start rolling,
Yeah.
Um, and that's just at my pace. That's been, what I have felt comfortable with. I've been using a lot of my own money for down payments and stuff. So that's how I have felt comfortable, not being over leveraged. I do use the bank's money. I do use private money sometimes, but I'm, really taking a conservative approach and finding the model that works for me.
Got it.
Um, and then to answer your question about how did I get introduced to life insurance, high cash value life insurance, from that standpoint, you're absolutely right. When I started looking at real estate investing as a tax saving strategy, as a strategy to start building wealth now in my 30s, I was introduced to life insurance as a safe place to put your money to work from for your real estate investing.
Got it. Got it. And that was just through a real estate group from an educational standpoint, correct? And it bridged into
Yeah,
cash value products. Yeah.
correct.
Okay. So that was your discovery of high cash value life insurance, particularly using it with real estate in that example. So we had met a little bit after that. Wasn't quite a year, but it was some time afterwards. So once you start to learn about high cash value life insurance, you actually obtained a policy as well that was different from the original financial advisor, what he had sold you. So call it a second policy there. So you've got a policy in force, which you're using for real estate. What had led you to continue to do research is my question. Because if I'm you and I've got something set up, I might still do research. It depends on what I have, just knowing myself. But why'd you continue to dig into it?
Hmm. I think that it just kind of goes with the territory.
Okay.
Like you said, and this also goes into like just how I am as a person,
Yeah.
right? And in my profession, I'm always researching. I'm always, I study. Like that's what I do, and so just taking things at face value isn't good enough for me. I might get set up and stuff with something. I had a SEP IRA, didn't know anything about it. I had a whole life insurance policy, didn't know anything about it, but I was like, okay, if I'm going to be putting my money in here, I need to know everything about it.
Yeah.
You know what I mean? So I think that in this kind of investigation and this quest for understanding these vehicles, I was introduced more and more as I continued to understand. I was building my foundation for, understanding how these policies work, understanding how they're designed,
Yeah.
and then just finding what works for me. And then if it wasn't working for me, then I was like, we need to make an adjustment. And I'll give
Yeah.
you an example. Okay, so I was I was massively accelerating in the real estate game. And I had like in 2 months, I had done 3 deals, which was for me quite a bit, triplex, a triplex and two duplexes within a 3 month period. And so I needed capital. So I contacted the life insurance company that I was working with, this is the one that was after that policy that was set up for my retirement. This
Mhm.
was supposedly the one that was the best one for real estate investing that I was told, right?
Right.
Was making quarterly payments. And I asked him, how much will I have available after this quarterly payment of $18,000? How much would I have available in the cash value? And they said six. And I said, I cannot tie up that kind of money, right? I'm doing deals. So I'm not in this game to tie up money. I'm in this game so this way I could use the money that I'm putting into it. So I called up the agent that I was working with who designed the policy for me. And I said, look, there has to be a better way. Like you can't tell me that the guy that I watched the YouTube video on, who's a multimillionaire in real estate, has this policy. There's no way that his advisors will allow him to have this. So something's missing, you know? And so honestly, then I came across your videos and I started learning about how you could have the minimum amount go into the premium, to go into the base premium, and then the majority go into your cash value, which it was lopsided for me. That's only a third that was going into my cash value with the policy that I had. So that kind of woke me up, as to the fact that I might not be, you know, playing the right, uh, playing the right game, but on the wrong team.
Got it. Got it. From a policy design standpoint, just where your money was going between the premium and PUA rider. Basically, if you've got $18,000 going toward a premium payment and $6K shows up in cash value, it's what you mentioned there, about 2/3 toward premium, which does not show up in cash value in the first year, and the other third toward PUAs. And you hit on a good point there that I hear expressed by a lot of people of all ages, really. I was going to say, especially our age, but all ages when I talk to different individuals, is the value up front, if I'm a business owner or an entrepreneur, is critical. Aside from the policy performance and growth over time, business owners value that upfront cash value, especially if you've got real estate or a business to invest in, or you just want access to the cash. A lot of times people don't even use it, but just having the peace of mind it's there for an opportunity is huge. What you mentioned there, a lot of people express that, just say, hey, if I'm going to do this, like, I do not want to have to give up a ton of capital in order to do it. It has to complement what I'm doing right now and
Right.
enhance what I'm doing right now. Don't take a ton away. That's typically the one of the number one objections I see with whole life insurance when someone doesn't do it or doesn't like what they have, is when they find out there could have been more cash value. Short term and long term, but particularly short term is what most people are focused on because it's an opportunity cost more than anything.
Yeah, yeah, absolutely. And the thing is too, is that when you are showing your financials to a lender, they want to
Yeah.
see how much liquidity you have.
Yeah.
And so if all your money is tied up in the insurance premiums and there's hardly nothing in the cash value, that's not a good look,
Yeah.
because they know that you can't access that. You cannot access that money that's tied up.
Got it. Yeah. That's a fantastic point. Thanks for mentioning that.
Yeah,
Oh,
absolutely.
okay. So let me ask this then. So when we connected and we started looking at different policies and you get the technical side, how to design policies for maximum cash value, we looked at a couple of different companies. What helped you refine that decision-making process, particularly focused on the product, cash value, looking at it, how do I maximize it? How can I add funds? And then we'll transition into phase two, if you'd like, regarding how you use it for real estate. But just as because you dig into things a bit and you want the knowledge there.
Hmm.
So what helped you refine the decision making process, knowing, okay, here's how much I want to pay in, but then also how can I get the money in? Like, I don't want to get a huge bill every quarter or every month. How do I set the policy up right if I'm articulating that properly?
Yeah,
Okay.
yeah, no, that's a great question. And I think it's also important to mention that in each step, because right now, right, I'm on my third swing with
Yeah.
whole life insurance, right?
Yeah.
My first one was a swing and a miss with a retirement one because the money was tied up in there and it was a very slow growing to mature process for that policy, right? So I think I may have lost, when I chose to surrender the policy, I lost about $15,000 that I already had in there.
Okay.
Okay.
Hmm.
Then I'm with this other policy where I have this epiphany where, maybe I'm on the wrong team. I was kind of hyped up, right, to getting into this policy, playing this game with infinite banking and real estate investing and stuff. And so they kind of hypnotize you, if you will, into the game where you're not focused on the numbers. And then you realize you're losing big time
Yeah.
when you actually go to look at the numbers. It's
Yeah.
not a good feeling. I surrendered that policy and I lost about $35,000 on that one.
Wow. Hmm.
So then going into the third one, right, which is where we're at now, you and I had to make a decision as to whether or not we were going to surrender my existing policy, take the L, or whether we were going to start fresh and build a massive policy that will eventually make up for all the losses that I've had.
Mm-hmm.
Right. And so I think that it does, that we have to mention this, Steve, because I don't want people thinking that, number one, there's no way to lose in this game, because you could absolutely lose in this game by being with the wrong, group or the wrong agent. People, there is a lot of remorse, and there's people who've had policies way longer than I have who probably have significant more remorse, more financial loss. You have to have a goal, and you have to know what that goal is when you're starting a policy. And I knew that my goal was to stash my money somewhere other than the bank, where I'd be able to get better interest on my money, and also being able to use it as a gas station, if you will, for my real estate investing.
Got
Right.
it. Yeah.
When you fuel up your car, it's supposed to take you further. It's not supposed to take you it's not supposed to set you back.
Right. I love that. I fully agree. And when you mention the hypnotized by the story or sometimes concepts, that's a good way you put it, because just being in this industry, and I'll refer to it as the culture of the industry, that's often what we see, or what I've seen for a long time, where it's, hey, here's this great product, or here's this process. You've got the concept here, high cash value life insurance, how it works. And then hypnotized or not, enough emphasis is not put on the numbers, which ultimately it is about the numbers. That's why people are interested in it. Meaning, what do my numbers look like? One, just an asset in the product. And then two, how do I use it as well? But I like the way you put that. I have not heard it in that way before. And it is so true. As far as being distracted from the numbers, focused on something else, it does occur quite a bit. And it's not just in this industry. I think that happens everywhere, if I were to be brutally honest. Yeah.
Very true.
Yeah. Gotcha.
You have to be educated in this, and no, there's not a wealthy person that is not educated on finances.
Yeah.
Granted, they have people that are on their team, in the accounting space, in the investing space and whatnot, but they're doing a lot of their own research.
They are. Yeah.
And you have to, there's no good way around it.
Yeah. And having the right team is important as well. If you don't have a team, your options are really A, get the right team members, or B, put the time in and do the research yourself. And that putting the time in means more than just doing an initial read through, or an initial video search or Google search, whatever it means. It's constant, right? It's constant research, and it's truly understanding it, and understanding it to the degree where I can explain it to you, or vice versa, with full confidence and understanding of how it works, which at that point you can say, I might as well do this for a living. Do I want to, yes, do I want to do that, or do I want to get a teammate or someone that can help me out, just with vetting the process, vetting the product, which sometimes can be the person that's selling it to you, but that's tough, right? Because there's a conflict there, no matter how you spin it. So it's important just to do your due diligence, A, put in the time, or B, have someone that can help you or help shorten the time, because they have the knowledge already and they know the right questions to ask. They know what to look for to make sure that you're being set up in your best interest. That it's so important in this industry. Mm-hmm.
So factual. Interestingly, I remember I was reading a book, and what is it called? It was a life insurance book. It wasn't Be Your Own Banker, Nelson Nash. It was like Live Your Life Insurance, or something along these lines. But the agent had encouraged me to read it, right? And so I'm reading the book, and I'm looking at the illustrations that the author is presenting in the book, and I said, none of these look like mine, right? These are breaking even within 3-4 years. Mine wasn't breaking even until like year 12.
Gotcha.
So I went back to the agent and I said, hey, in reading the book that you advised me to read, I have a question as to why my policy is not breaking even until year 12. And the ones that in this book, like, these were only like cash funded for like 5 years.
Money, Wealth, Life Insurance by Jake Thompson.
That's it.
So the highly cash value product. Yeah.
Yes. Yeah. And I even saw a policy where someone put $75K for 2 years.
Yeah.
Yeah. And I'm like, where's that at? You know what I
Yeah.
mean? Because
Hmm.
those policies are growing, over time.
Yeah.
And early dumping of the cash value, early acceleration, and a lot of momentum in the early years. So I didn't have that going on in my policy. So the agent was like, "Oh yeah, because you would hit the MEC limit. Don't focus on the numbers. It's a 9 inning game. These were all the things I was being told."
Yeah.
And I'm like, "Hold on, it's in the book. There has to be a way to get these
Yeah.
type of high cash value policies."
It's in the book, and when you look at corporations and cash value products being an asset on their balance sheet, they are interested in high cash value immediately and long term. That example you see in Jake's book, actually. So I don't know if I ever shared this with you. Jake and I, we've worked together. So he still actually has an entity that we still do joint work to this day. We've worked together probably something like 7 or 8 years now, a while. Him and his brother-in-law, Nick. But that particular product there, that high early cash value policy, that product is available and used heavily by corporations. And sometimes it's not. Long term, it's not quite as strong. But it is a whole life insurance policy that anyone can attain. It's available as an option. So going back to corporations is exactly what they do, and it's available to everyone. It's just really, was I shown it, and is it something that I'm interested in? And from the consumer perspective, is how I look at it.
Exactly. Exactly. So, we should be shown these options,
Yeah,
you know, and the way that I look back in retrospect and I see how I got fooled.
yeah,
But they put a lot of excitement around what you're getting, so they kind of make you feel like you're getting the best thing. Like, oh, Justin, congratulations! You got like this amazing. You got approved for this amazing policy. So it's like it's making you feel like you achieved something. They
yeah.
don't. What they don't tell you is that the policy, they're more excited about it because it's a policy that's designed for the agent and not for the consumer.
Yeah, no, I hear you there, and I will not go into detail on that because I believe it's no, as an agent, I should not do that. But so let me ask this. So your policy is designed primarily for real estate. Well, it's to accumulate cash value. You've got a significant death benefit from a long-term perspective as well. But for real estate deals, you like the idea of using it as your gas station. I like that illustration. So you've got access to capital that you can put it here, continues to compound, and leverage it as a personal line of credit. Whether you go directly to the policy or the cash value collateral loan, we can hit on that if you want. But the policy design. So you've got a ceiling there where you can pay in a certain dollar amount per year. However, when we set it up, what was important is designing it where you're not billed for this huge amount each year, each month, anything like that. So when selecting the right company for yourself, because I do recall we went through a ton of different options, different dollar amounts and such, selecting the right policy, what helped you refine that decision-making process? This way, the policy never felt like a burden, if I'm going to put it that way,
Yeah.
from a
No,
payment
that's
and
a great
commitment.
question.
Yeah.
Yeah. What I really liked about the policy that I have was the flexibility in the way that I could put money into the cash value, into the PUAs. So I know that what we had talked about, like with Mass, I think I had to do it all in one lump sum.
Yeah.
Like if I wanted a PUA rider and I wanted a significant amount just in PUAs, I would have had to do it all in one lump sum. But the way that I'm making money in real estate is like, I might sell or refi a property and then have the money at that time, but that could be multiple times throughout the year that same process could occur.
Yeah.
And I want to be able to have the flexibility to put the money into the policy at that time, into the PUAs
Nice.
specifically.
Yeah. Basically, where you can commit to the minimum. And initially, you actually paid your minimum premium just monthly. So this way, you've got
Correct.
an absolute minimum commitment and can pour in excess funds at discretion. Of course, I believe we did switch it to annually or just no longer monthly, where we have that option, just because there is a small fee when we do that. So obviously, if we can bypass that, that doesn't hurt by any means. It definitely helps
Exactly.
there. Yeah. So the flexibility is important. And I do the exact same thing myself. This way, I'm always committed to a minimal amount that never feels like a burden. To use this illustration, we feel like we can do it in our sleep. And that's all relative to anyone, whether someone is paying in a maximum of 5,000 per year, they commit to 500 per year, just an amount where they never feel like it's a
Hmm.
challenge. Hey, I can do that. And I don't feel it at all for my personal balance sheet. And
Right.
then as cash flow fluctuates, I can throw in excess money up to the maximum of 5,000, 500,000. Everyone's situation is different, but everything can be scaled in the same in the same fashion.
Yes. And I think it also comes down to how seriously someone wants to treat this as their own bank, right? Like if you truly want to treat it as your own bank, then, you're not going to be afraid to put money into this thing,
Right.
um, and, you're pretty much substituting this with your bank account, right? So I wanted something where I could get large amounts of money in there, where I would have that high ceiling, and also where I would be able to have the flexibility to put money in there as much as I would like to.
Yeah. Very nice.
Yeah.
So let me ask this. So you're using it for real estate now. When you started it and when you have it now, what are some things you don't like about it? Because often we talk about the good, the PUA flexibility,
Hmm.
can access the cash value. Think back to you when you're first doing research. The question, and this may not have come up, but it's like, what's the drawback here? What do people not like? Not so much from the beginning, but after they get into it. If there's anything you can think of, not to put you on the spot.
Yeah, no, I think that's a great question, right? There's always pros and cons to everything,
Yeah,
or trade-offs, right? And so I think that you have to be willing to see that negative internal rate of return in the beginning.
that's it.
Um, there is very, little money that's going from your base premium to your cash value. Now, if you wanted to contribute strictly to the PUA, you could do that. But in paying your base premiums, almost 100% of that money is going into the base premium. Where I think like after year three, the base premium and the cash value is equivalent. So everything that you're paying on a monthly basis is
Coming
you're
back to
seeing
work.
it reflected into the cash value. Yes.
Yeah, yeah. So the initial
the
cash
initial
value.
the initial year the initial year, maybe year and a half,
Yeah,
you have to be willing to be patient with this.
yeah. That's the number one thing where everyone's eyes always go, including myself, because that's what most people express. Why would I not do this? The upfront cash value, the hit, especially if it's an opportunity cost for real estate in your case. Like, how do I minimize that as much as possible? Because cash value life insurance policy is not a barn burner in the sense it's not going to make a ton of money for me. It's not.
Hmm.
Like
No,
what,
right.
yeah, your real estate practice is really what's going to drive revenue and increase the
Hmm.
financial situation, improve the financial situation. This is a great vehicle that can complement it. But if the drawbacks are too painful, where you look at it and say, it's not worth the upfront hit, then it's like, forget it. It's like,
Yeah.
if I want a car, I might look at my monthly payments. If I want a nice luxury car, for example, what's the monthly payments? Okay, it's X amount of dollars. I got to make that kind of down payment. Oh, forget it, right? That can help refine someone's decision making process there.
Right.
I hope that illustration made sense. But similar mindset here. What's the down payment or the upfront hit, and how do I
Right.
minimize that as much as possible? Because it's equity at the end of the day.
It is, right.
Yeah,
Yep. And you don't have equity in your house when you first put the money into it. That equity takes years to develop and to
yeah,
mature. But I
yeah,
think that and there's so much talk around whole life insurance that maybe like a layperson may think like, oh wow, I have to get one of these to be wealthy. A life insurance policy in of itself is not going to make you wealthy.
yeah,
It's not. This is a strategy. It is a centralized vehicle for you to keep your money in, and as you're investing in other multiple streams of income, that could be real estate, that could be REITs, that could be stocks, that could be bonds, that could be lending, right? Um, you're using this as your nucleus.
yeah.
This is your gas station, right? And all the cars that you have, all the vehicles that you have, come here to get their fuel.
Yeah, I like that. Yeah. I'll throw active income in there as well. That's just because
That's Yes, exactly.
I enjoy
Yep.
it.
Should have some
So,
active income.
right on. Agreed. So, using the policy right now, so you've grown your real estate practice pretty quickly. Nice work on that. How are
Yeah,
you
thank you,
using
Steve.
the definitely? How are you using the policy? Are you looking at direct loans or cash value collateral loans? And you look as you looked at those two, what helped you decide on one versus the other?
Yeah, so I have used direct policy loans before.
Mhm.
Now I'm more interested in the cash value collateral loans, just because I'm more interested in arbitrage and increasing my arbitrage with every deal that I do.
Yeah.
So if I'm looking at a 20 to 25% ROI on a real estate purchase, I want to make it 30 by borrowing from my policy.
Hmm. Yeah.
Um, so I think that it's important to, like, have it as a strategy, like to also concentrating on how you're going to borrow the money strategically and how you're going to pay it back,
Yeah.
you know, because once it's in there, that's one thing, but then what are you going to do? What avenue are you going to use to borrow it? That's the other
Yeah, that's important. Looking at the payback schedule too. We what we see sometimes is people are attracted to a particular concept of using cash value life insurance and say, I want to flow all of my income or all of my company's revenue through a policy because it's all compounding, it all stays at work for me, which is great, right? But at the same time, what are the drawbacks there? One, the negative internal rate of return. But two, with loans, is if someone wants to flow their income into it, it means they have to pull that cash value out. They've got to borrow it to
thing.
live, right? Or for their
Right.
business expenses. So if you do that and you're already putting all of your income towards the premium and PUA payments, what's going to happen when you've got the loan interest and the loan balance? We do have to account for that, which I'm hopeful that my income will increase and I can take care of it that way. Or if that doesn't happen, then I've got B, which means I have to reduce my PUA payment and then redirect that money that was going toward PUAs toward loan payments, which will impact the overall performance of the policy, what I originally looked at. Like, it's important to see that stuff up front and really plan it out, looking at the numbers. How do I want to attack this from a loan perspective if it's my intent to use it? And what happens if life happens and I can't pay it back? I got
Mhm.
to see that up front first. This way I know, okay, it'll blow up or I'll be fine.
Right, right, exactly. And so I think that it's important to consider that from that perspective when you're looking at how aggressively you want to be using this as your bank.
Yeah.
It makes a lot of sense to use this as your bank if you're going out there and you're getting higher rates of return on the money that you're putting into it.
Yeah.
Then, by all means, if you're using it for investments, most of the time it makes sense to take a loan from your policy or to do a cash value collateral line of credit.
Yeah.
But if you're just using it to spend it, uh, not a lot of, you know,
Yeah. I'm
that
with
doesn't
you.
make a whole lot of sense.
I agree. I agree.
Yeah. And I
Well,
mean, like if you think about this, Steve, like if you're say you're using it as a down payment for like a fix and flip loan, you know that you're going to be getting out of that bridge loan or that fix and flip loan within a 6 to 12 month period. It makes perfect sense to use this as your, down payment, because then once you refinance or sell the property, then you could pay your loan back,
yeah.
or you
Yeah.
could just pay the interest back and then put the principal into the PUAs.
Yeah, exactly. So let me ask this, and we'll start to transition or close with this. Just through your experience, not just with cash value life insurance, if you were giving advice to someone, what would it be? And it can be on cash value life insurance, could also be on business, real estate, just from experiences, things that you've learned not to do. As I look back personally, there's things I wish, if I could do it all over again, I wouldn't do this, and a million other things. But what advice would you have on business, real estate, for me if I'm brand new in it, for
Yeah,
example? Yeah.
absolutely. So I think number one, educating yourself, right?
Yeah.
Self education. goes a really long way. And then when I think back at like, how, um, some of the mistakes that I made and, I say that that's like a part of paying for self-education, right? All education has a cost. Self-education has a cost too. And unfortunately, that comes with being ignorant in the beginning. And sometimes that could have a price tag on it. And then I would say that, like, continue to grow in your skill set to increase your income. By me having experience and specializing in cardiac surgery, I was able to take my income from here to here. And then going into the independent contractor realm and being paid as a 1099, I was able to take it to here.
Yeah.
What that amounted to was me being able to leverage a really large policy, because the policy amount, my face value, was based on 30 times my 1099 income,
Yeah.
which was a lot of money. So that allowed me to have a really strong, large policy, which equates to larger cash value amounts that you could put in there. More cash value, more money at work for you. Um, More flexibility that you could have with investing, and
Got it.
kind of turning that into more opportunities. So I think that my overall my advice would be to educate yourself. Um, no limit on self education. Number two, improve your skills so this way you could maybe become an independent contractor in your field.
Yeah.
Because then that opens up other opportunities, such as larger policies.
Yeah.
And then thirdly, network.
Yeah. Thanks. I would say the exact same thing. I mean, the education is important, and taking your time with that. It's not going to happen overnight. Don't get caught up in the instant gratification there, because that happens, especially to us today. But take your time with the education. The networking piece you mentioned can help you with the education. There's a person, I talk about her a lot, the attorney, Elizabeth, who you know as
Yes.
well. From an
Yes.
educational standpoint, like, she's one of the top business people I know that I have a lot of respect for, because she's extremely well educated. And how she, when I say that, yes, she went to school and such, obviously, but she'll take the time and dig into things. I mean, she's shared during her weekends, she'll spend like 12 hours per day reading up on material, news, certain concept, product, whatever it is. And to have that drive just to consume knowledge like that makes you a very, very valuable asset, right? Especially for a business owner, because if you think, I can't do that, like, how am I going to put that kind of
Right.
time in? Here's someone that does it. Anyway, from a networking
Yeah.
standpoint, go ahead. Yeah.
And on that point, Steve, I think that, like, everybody in their team selection,
Yeah.
that as they're growing their team, you're gonna, even the persons that are not going to be on your team, for a long time, or you might end up, moving on to another person or whatever, right? I've been through 4 different accountants, 3 different financial advisors, and they all have taught me something. Even the ones that weren't, you know,
Yeah.
that didn't have my best interest, I learned something from them.
Yeah.
And the one that I was telling you about, where I, surrendered the policy and lost 35K, I had to, part with 35,000. I met Dolph DeRoos, through working with that individual. Dolph DeRoos is Alex Rodriguez's real estate investment advisor,
Okay.
and I've read all of his books.
Yeah.
And he's the one that piqued my interest into investing in commercial property. So now I'm doing commercial properties, right? And so I think that and then through the one that through the policy that I had at first for the retirement policy, I learned about retirement accounts, SEP IRAs, solo 401ks, things like that, right? You learn something from everyone, so even when you think you're losing, you're really not. It's all a part of the experience and the learning experience.
Yeah.
Um,
Continue. I didn't mean to cut you off.
no, I was just going to say, like, it's important for everybody to go through some, you know, uh, through some team building process. So this way they could have their own experience. Not everybody's going to do real estate. Not everybody's going to do stocks. Find what works for you,
Yeah.
find what makes you excited. And, that's where you should be.
Yeah, I'm with you there. Do what you enjoy, and you'll have a lot of fun with it. And when we run into situations where we learn and call it painful learning, right? If we lose money, like the examples you mentioned, where the base premium, those dollars are gone, especially if you say I'm done with this policy, like that's happened to all of us where we've lost. And when I say lost, financially hurt as a result. When that has happened, like how I view it when it's happened to me is there's one of two things I can do. I can fight it and I can try and stick my foot in the ground and say it's a matter of principle. I'm going to make things right because I just have to be heard here. But the amount of time and mental energy that you put into that just is so draining. And you have to ask yourself, is it really worth it? Versus saying, whatever. Not to say it's just money, whatever. Like, to have the mentality say, you know what? Can I make it up, right? Can I just focus on being productive and move forward and know, okay, I'm not going to do that again in the future because I've learned. And here's what I have noticed. The people that go with option 2 to say, man, I wish I didn't do that. Yes, maybe it stings a bit or stings a lot, but I'm not going to go back and try and dig into it and waste all sorts of time and stress myself out, lose sleep over it because this stuff happens to everyone. I'm going to move forward. They, every single time, are way, way further ahead from one, being less stressed, and then 2, financially as well. I've noticed that with the majority of people I speak with. So anyway, that's my observation there.
No, I really appreciate that. And just hearing your, your personal experience with, some financial obstacles. Yeah. And we're going to have them, right? Like, it's not a matter of if, if you're, you are going to have them, it's even if you're not doing anything and you want to just play it safe and just work a 9 to 5 for the rest of your life, that's a financial obstacle.
Yeah, it definitely is. Yeah. I just, focus on enjoying things as much as you can. And if more money results in more stress, and this is just my personal standpoint, don't do it. Like, it's not worth it. The time is way more valuable.
Right.
Who do you want to spend the time with? What do you want to do exactly? Make sure you're doing that stuff.
Yeah.
9 to 5.
And I mean,
it's okay.
Right. Yeah. And what are your financial goals, right? I think like a lot of people, they forget to like think about what their own goals are, you know, like my goal is to work 6 months of the year. Right. So it's like, I know that I have to have some other sources of income to make up for that other 6 months that I'm not working.
Gotcha.
So, everybody just has to have their own financial plan, if you will.
I am with you 1,000%. Well, let me ask this before we wrap up. Anything you wanted to add at all?
No, I think we hit on like all the points that I thought would be pertinent to mention from my own personal experience, and I just hope that someone, or people are able to take away from, any mistakes that I've made or in their thought process of, maybe moving forward with whole life insurance, make sure it's a good fit for you. It's not a good fit for everyone. And have your goals, like have your financial goals to make sure that this strategy makes sense in your financial world.
Yeah, I 100% agree. Thank you so much, Justin. Really
thank you for having me, Steve. And again, thank you for all your education videos that you continue to put out. I don't know if you realize how valuable that content is, but I don't think, at least I haven't come across anyone who is giving the detailed amount of education on whole life insurance that you give. And it's unbiased, and I think that that's a huge part of what you do is I never got the feeling that you're trying to sell me something. I just had the feeling that you were trying to find the best product that fits in with what I need it to do, how I need it to perform.
Mm-hmm. Yeah. Thank you. No, I do appreciate that. Thank you very much. And always open to criticism for areas we can improve. But thank you. The intent is never to sell per se. One thing I let people know, I think I've shared this with you on the phone, is I've never been a closer type person or ask for the check. Like, I've still never done that. Say, hey, let's make the deal. I need to ask for the check. Like, never have. I view it. I like Amazon's model a lot. They show the options. I can click a button, pick the option I want. Can't quite do that with cash value life insurance, not yet at least, because of all the ways we can design it. But how I envision it from a long-term standpoint is, how do you emulate that, where people can see their options on Amazon, still be well educated so there's no buyer's remorse, know the product, here's what I can do, what I can't do, have resources such as agents and people that can help them. Like, how do you package all of the important pieces and make it so convenient for the individual that's taking that policy out? Like, how do you accomplish all of that? And then do the same on the back end with the service. So as we continue to build, refine, and improve it, that's how I look at it, just because that is ultimately what the customer wants. Just from always speaking with individuals and such, they want it as convenient as possible. They also want it as transparent as possible. So videos have been the most effective way thus far. That and books are great as well. But those are the two most effective strategies thus far. But anyway, yeah,
and it's hard. Videos are hard, So you've certainly mastered that tool. So good for you.
Thanks. Yeah, I'm always working on those. There's times I'm kicking the not the camera, but chairs in here and such when I mess up. But anyway, I learned that just the presentation skills, actually just from congregation meetings and such, which you and I have talked about before. That's where it all stems from. So I just take what I learned there and then just apply it to the best degree possible here, because it's good training. But anyway.
Exactly. Yeah. Spot on, Steve. Spot on, man.
I'll keep talking all day about this stuff with you. I appreciate your time. Thank you so much.
Thank you for having me, buddy. Appreciate it. Always a pleasure.
Likewise. Enjoy, and hope everyone listening has a great day as well. Justin, enjoy your day.
Take care, guys. Thank you.
Thanks. Bye. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.